Welcome back to Krown's Crypto Cave. Wishing you a very happy 4th of July for all the celebrators out there. For everyone who's not celebrating, well, happy just regular Sunday anyways. With that said, we have a lot to discuss today. Of course, following up on the short-term time frame targets, which we did meet from yesterday's video. Now going to extend those into the medium and higher term time frames. And then, of course, today is going to be a big focus on the macro structure as well, as we like to update that every, whenever necessary. So today might be a bit of a longer video, hopefully not too long. And with that said, let's get into it right now. Starting off the Krown Chain application, which we found at app.krownchain.net. By the way, before we get into that, we do have a sale going on right now for the good old 4th of July, running for the next, I think, week or so. And if you are interested in any one of the programs or indicators, definitely check it out here on the app. Make sure that you watch the video so you can understand if it's, if it's actually what you're looking for or not. We really do not want people getting into things that like they don't actually want to be in because, well, why the fuck would you want to do that? So we created videos for you on the application there. That'll go into depth in explaining it, and perhaps at the end of this video, if there is time, I will do a bit of a primer on that as well. But I think that's where we can really leave it off right there and now get into the fun stuff. So as far as the Krown Chain application goes, do we want to go through any of the quant data going on right here or right now? In fact, I actually don't think so. It will play into the analysis a little bit later, so maybe we swing back into this, but today is going to be such a focus on the higher term timeframes that I think we just want to get into it at this exact moment. So we're going to follow up on the short-term timeframes from yesterday. First and foremost, what did we say yesterday? We said Bitcoin more or less likely to move to the upside, and the sort of triggering condition for that would be taking out the 2nd of July high right here, or just closing on a closing an hourly above about 34,000 bucks right here. And we got that. And where's our next target to? About 35,000 bucks, of which we're hitting right now. Now, of course, did take a little bit of time for that to happen. And what do we have going on right here? Actually, we actually have something new evolving from that formation. We do have a bit of a cup and handle. It's maybe not the most obvious on a 4-hour, but on an hourly, we actually have a pretty damn good one right here. I usually don't call out cup and handles because I'm not a humongous fan of it in cryptocurrency land, but this is like as fucking textbook as it gets. Here's your little cup portion right here. Here's your little handle right here. It's like, here's my teapot, here's my spout, that, that old song. And we can make a bit of a measure move on this one right here. A formation within a formation, actually. And guess what? That's pointed up basically around our highs of last week, which is that 36,500-ish region. Now, of course, that can bleed into the higher term time frames at that point, which I think that it very likely will. And we very likely make a move into the deep portion of this range, the same range that we've been in for the past almost 2 months now, between about 31,000 bucks to the downside versus about 41,000 bucks to the upside. Now, of course, as always, it does come with condition on the other side, although the biases are rather clear right here, just, very similar sense to yesterday as well. And where do I kind of let go of this idea? Well, below the same sort of area that we had for a breakout yesterday. Obviously, that would be about 34,000 bucks. If you want to be a little more aggressive, you could use about 34.4 right here, just a low side of that last little consolidation before this nice little hourly move. As far as momentum oscillators go, we see everything turning up alongside of it. And more importantly, and this is actually very, very interesting to myself, BBWP over here, our volatility-based indicator, is actually still pretty much on the floor. So we haven't necessarily seen expansion just yet. And this is consistent amongst actually all lower-term timeframes, and you'll even see it in the medium-term timeframe as well. So that's your hourly. Here's your 2-hour, trending down right now still. So we really haven't seen the move, so to speak. 3-hour is actually trending a little bit up right there, to be fair. And then 4-hour popping up a little bit as well. But more importantly, these are all very, 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 very low, all things considered. And when we go to the medium and higher term timeframes, it's even more, well, enticing, I would say. Anyways, 12-hour right here, we do see it back down around actually single digits for the first time in, the first time since May, actually. The first time since May and April, of which these precipitated humongous moves. Obviously, the May one was the one to the downside, 50% move, clean shot through. And then, of course, the one before that was, I think, about a $10,000 rally between about 50,000 and 60,000 bucks. Anyways, this becomes even more interesting once we go to the daily, which has actually been trending down the whole way through. And remember, this was one of the conditions that we were looking for or one of the 3 conditions that I've been looking at as a potential signal of a macro bottom. Now, of course, this is not solidified just yet, and we'll go over it actually in a second here, but you can see that it is trending down. And now we are officially in, we're not on the single digit just yet, but we are literally at 10.32 percentile right now. So we're very, 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 very low. So with that said, let's do the daily perusal of what is the macro conditions, what are the conditions? What are the 3 major conditions, of which, there's plenty more too, but these are the 3 easy ones to kind of remember and follow up over time for denoting a macro low potential in Bitcoin land. Well, actually, we have 2 of them now. Now, this is actually very, very good. Okay, very cool. Okay, so the first and foremost one would obviously be the half turbines indicator over here. Now, this one is not given a signal, but there is something rather interesting with this. Of course, what would that be? Well, the fact is that the difficulty adjustment for the miners actually got the biggest reduction that we've actually had, I believe, in the history of Bitcoin. So it would be relevant to say that this probably does start to converge on each other, but as you can see right now, it is still in the recovery phase, and it's actually very diverged from itself as well. So it's not necessarily happening anytime soon, but I would like to see a blue buy signal as we have seen in the past. If we get that alongside a higher low and that BBWP read, I would be looking at that as well, good enough for myself at least to strongly entertain or at least trade in that direction, that this is your next macro low. With that said, we do not have this just yet, so I will hold off on that conversation. And naturally speaking, I do think it will take some time, regardless of whether it's not regardless of whether you're bullish or bearish. If you are bullish, I do still think that you are going to be taking a lot of time to wait here. I would not be enticed into any sort of a failed move that does not get past $50,000 at this point. But the setup is there, and if bulls are going to hold this price action above the $30,000-ish level for the next, let's say, another month and a half to 2 months, that would start to look very, 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 very good to me. Somewhat similar to what you saw in like September, October of last year, actually. Anyways, going over these blue buy signals right here, I just want to kind of go over a few iterations. Of course, you can go to the last long-term analysis video. It's still very much relevant, although we can start to siphon off some of the potential scenarios that we did talk about as we did get more and more clarification on the last major closes. Anyways, the last blue buy signal that we had, and the sort of interpretation that I want to relay to you here is that once we got the blue buy signal right here, again, terrible timer, terrible timer. But my point is, after we got the blue buy signal, the low on the daily before that was the last higher low before just essentially continuation, meaning that the trend is your friend in that case. And we have about 11 iterations on this, on this indicator, of which 10 out of 11 have actually worked out in this way. The only one that did not work out in this way was actually the one prior to the coronavirus dump over here. But we'll go through one more example as well. We get the blue buy signal right here, and then of course, what happens? Bitcoin actually even does come back down in the similar fashion that we saw on the prior one. But the prior daily low was solidified, and we did not go lower than that ever since then, to be fair. So can we go through one more example on top of that? We can go through this one right here as well in coronavirus dump time here too. This one was coming out of the coronavirus dump time, and we got the blue buy signal right here. Again, a little bit later. Actually, this one was a pretty damn good timer, to be fair, but the prior daily low before that was the low. So if we do start to get something like that, I really strongly would entertain the possibility of a macro low in place for Bitcoin. What's the next condition that we've been looking for? This one rather important as well. Do we have an upturn on the daily? Well, we do have a higher low actually in place right now. So this is very significant. How do we get a higher high? Well, we're not going to be making a higher high anytime soon, it looks like. But if we do take this high right here, about 35,900 to 36,000 bucks, then yeah, I would say it's probably going to happen in this case. Some people might look at this as a lower high right here. I would say it's more of a complex sort of bottoming formation more than anything, but technically speaking, they would be right. And I guess it's kind of a moot point. Yeah, it would work. It would essentially work. And more importantly, we do have that higher low in place. So we can now use this as a basing point, 33,350. So it is in place. It is a possibility, and things are starting to unravel themselves in a more tasty manner for the blue laws out there. Anyways, the third and I'd even say most important one would be the BBWP interplay over here, of which we do have several things in place that are actually looking very mature within this. First and foremost, we did hit 100 percentile on that last downside move in May 19th, May 20th region right here, and that tells you that it's an extreme move. Of course, similar to what you saw on all extreme moves. Now, of course, most of these were to the upside, so they're not going to be as relevant to what we're talking about. But to the downside, we did see BBWP on the daily specifically get up to 100 percentile. Only a couple of other times in the last few years. That would be your coronavirus dump time right here, of course. That would be your 6,000 to 3,000 move right here, of course, as well. And that tells us that we are at extremes, and you expect to be at extremes when you are, potentially at macro lows. So we did hit that, yes, but then the next two conditions that I wanted to see on that is I wanted to see the BBWP essentially trend down and then get to as low as possible, essentially. I mean, on, your big macro moves, you're going to get into the single digits. And like I said earlier, we are actually right now at 10.32 percentile. So this is, really working its way down there. I mean, this is what you saw in coronavirus dump time right here. Hits 100%, or was this coronavirus? No, this was 6,000 to 3,000, but same thing, or very, very similar, actually. This one hits it on the actual downside move, trends all the way down in a very low volatility environment, as it does put in the lows, put in some higher lows along the way as well. And then what you have right here gets all the way down to just under 5 percentile, or actually just at 5 percentile, it looks like. And then you got your rally from 4,000 to 14,000 bucks. Not bad. Same thing coming out of coronavirus dump here as well. Hits 100 percentile, and then we just trend all the way down, all the way down. This one even hits like basically 0 percentile. And where do we actually start to expand from there? Well, that would be 22nd of July. I think the rest of this right here, right? Very, very similar. In fact, I'd keep a keen eye on this right here. This is very similar to what I think we probably are doing right now. Anyways, as it stands right here, we are working our way down around there, or Bitcoin, more importantly, is working its way down around there. So I do think that, this is starting to look, it's providing a good, good counterpoint to a lot of the bearish things that are currently present on the chart. And believe me, even if I am going to be bullish from here, it very likely does come with a lot of waiting and probably a bull trap in between. The question is, does the bull trap bring us back down below 33,000 bucks, or do we hold that that territory and then grind its way out for another couple months? That, in my opinion, is going to be the best case for bulls. Again, if you are just if you're a visual person like me, you're probably looking at something like this, or this would represent it right here, this red sort of half circle that I draw on down here. Again, I drew this in like literally on May 19th and May 20th, and I just said, hey, if the bulls are going to hold it, it probably looks something like this over a long period of time. And so far so good, actually, like hilariously close right now. Not that it was intended to be, it's just like a general guideline, but now working. So with that in mind, and with the short-term timeframes in mind, yes, it does look like Bitcoin does have some some upside from here, and I do think that Bitcoin very likely will mount an assault to the $40,000 territory at the very least, and then probably into the mid, maybe even deep $40,000 territory. But here's where I do start to exercise a lot of concern. So again, running with the assumption that if Bitcoin bulls are going to grind this one out, it's very likely going to take some time. What could it potentially look like? Well, if we go back on over here, I want to bring you back to this. I know that we've gone over this a million goddamn times, but the millionth and first time is even better, and that would be the bi-weekly MACD, of which we actually are closing this one tonight at 8 p.m. Eastern time, that is. And anytime that we have seen the bi-weekly MACD cross the downside, we've seen a very specific interplay with this. The last time that we saw it was October 2019, and of course the time before that was February 2018, and then the time before that was February March 2014, which we can go into the price action charts right here, as it is very, very similar to what we're doing right now. So the last time was right here. And oh yes, I'm on log scale. Okay, cool. And what happens? Bitcoin essentially consolidates for about 3 months on the highs, drops down to the 20 simple. We get the cross right there. You can barely see it on your screen, or actually you can't see it on your screen because it's right here. It's right here. Based off the 20 simple, bounces up above the 9 exponential average and does have a bull trap. Comes back down based on the 55 and eventually breaks lower. To be fair, too, you could say that this was a black swan, and maybe Bitcoin was going to head up from this territory right here based off that, or sorry, if that event didn't happen. But at the end of the day, I mean, we have to trade what's in front of us, and I don't think that that's a useful thought process to go through, because, well, what are you going to do? You're just going to tell like the liquidation engine, hey man, it's a fucking black swan, you can't liquidate me. like get out of here with that bullshit, I'm not paying. Anyways, all jokes aside, we get a very similar interpretation over here as well. See the bi-weekly MACD crossing down right here. Bitcoin based off the white 20 simple, bounces up above the 9 exponential average, bull trap down at the 55, breaks low over time. And same thing on the last iteration that we see way back on over here too. Again, cross the downside right here, bounce off the 20 simple, up above the 9 exponential average. In this case, got several closes above it, in fact, but a bull trap nonetheless. And where do we come down? To the 55 over the next like half year, it looks like, and then eventually break lower before putting in the actual lows. Now, currently speaking, what is Bitcoin doing? Well, we did get the bi-weekly MACD crossing the downside. This happened a few closes ago. And what are we doing right now? We're bouncing around the 20 simple moving average. In fact, looking at all these wicks down here, that looks completely fine to me, actually. At least for a little bit of a bouncy bounce. And have we tested the 9 exponential average just yet? We did on the last one. However, in all iterations in the past, we actually have seen it at the very least trade above, and in 2 out of 3 cases close above. So it is relevant to say that, historically speaking, probably are looking at something like that. And what is this looking like right here? Well, where would that number be? I mean, that would be in your mid $40,000 territory. So that would be kind of strike one in a little bit of a concerning phase for Bitcoin here. Strike number 2, and again, keep in mind that the 55 on this time frame is right around about 24,000 bucks. Will obviously be rising over time too. It'll probably come around 25,000 bucks on the next closure. Anyways, moving on to the next one, and a big one for myself too would be, of course, the monthly accumulation distribution indicator right here, represented by this nice little, what do you want to call this, chart graph, whatever the fuck. Anyways, more importantly with this, we have seen coming in from June to July, this month right now, this fresh one right here, we have seen it get a negative slope. This is the first negative slope that we have seen since May 2020. what was May 2020? That was literally coming out of coronavirus dump time and was pretty much the perfect timer of a very, I would say, safe long-term investment, if you will, or about as safe as it can get. I mean, everything does come with this risk, obviously, but in this case right here, it's basically straight up from about $8,000 to $65,000 as far as the monthly is concerned. And anytime that we have seen a slope change on this, well, that has been typically macro moves. The last, for example, the last down slope that we saw was coming in from January 2020. January to February, downslope right here. Somehow it knew coronavirus sometime was coming after that. I don't know if it actually knew, obviously, but you can see that it was essentially a major warning signal. And well, I wouldn't necessarily say it's always going to tell you that things are going to dump out like 50% here. I think that was about 50% at least. Nope, more than that, 62.5%. I do look at it as a sign of caution. And what do we see before that? I mean, we do see it obviously twisting to the upside over here. This one did kind of flip-flop around a few times, but okay. And then that was, your January 2019 lows before moving up from about $3,000 to $14,000. Anyways, the last time that we saw a downward slope before that was March 2018. Basically your bull trap of 2018, by the way. That was your move. And also rejection to $12,000 before heading lower over the next year. And where do we see after that? We see, well, obviously a positive slope right here, giving you the lows of 2015, and then right here your bull trap of 2014 as well. Now there is one iteration where this did not produce a macro downside move. That would be right here, June 2016, where we actually did get 1, 2, 3 months of downward slope, and that was essentially a corrective move all the way down to the 9x benchmark average on the monthly. Here's the thing though. This iteration right here, while it is I think relevant, I don't know how much weight I'd put on it in the totality of things. The reason why I say that is because several other underlying market dynamics are not in the same structure as well right here. We already went over the biweekly MACD. You already know there was no iteration of the biweekly MACD crossing the downside right there. If you want a more simplistic way of just looking at this, which we can do right now, we can get rid of all of this. You see this cyan moving average right here. That's the 9x benchmark average, and funnily enough, it just happens to be one of those things. Especially if we go to the total chart right here. Anytime that we have been closing above it, and especially when it has a positive slope, Bitcoin's been within the throes of a bull market. It tells you to stay long the whole way over here. And then the second that a monthly closes below it, that is your corrective or crash phases, if you will. Same thing right here where Bitcoin closes below, and then from prior high, or let's actually take the prior high in this case. Prior high would be on a closing basis, because these are probably like super wiki markets, down to last or next major low would be about 82% pullback. Anyways, tells you to stay long the whole next couple years from about $6 all the way to $1,100 or $1,200. And then what happens over here? We close below the 9x benchmark average. Bitcoin bounces around a little bit too. I mean, it does put in, essentially a bull trap, but prior high to next major low, 82.5% as well. Rather interesting. Then when Bitcoin regains it, hey, glory times once again. All's well and good. Although you can't just blindly say that, because we do see bull traps above that level multiple times actually. Anyways, that leads you the whole way through 2016 to 2018, and then what happens inevitably in March 2018? We close below it for the first time. Bitcoin bounces around a little bit, but prior closing high to next major low, we have a 76% move to the downside. Once again, and then you get your rally of 2019, of course, and then what happens right here? We close below it, prior high to next major low on a closing base about 40.5%. From a wick basis, I think significantly more, about 74%. So you do see kind of like a rhyme and reason between all of these, and not good. So anytime that we have gotten even just one closure below, yes, there typically have been bounces after that, but the bounces have been bull traps. Is kind of like the picture that I'm painting right now. And what have we done as of June? Well, the one that just closed, we did close below. We actually did close below. Ever so slightly, yes, but all the other ones were ever so slightly as well. Similar to this one, similar to this one. Actually, this one was a little bit more. This one as well, and then this one as well. And all of those did have bounces after the fact too. But remember, they were rejected eventually and did come lower over time. Anyways, most of these actually even finding their lows somewhere around the 20 simple on a closing basis, although not necessarily in this case right here, and not in that case right there either. So perhaps not. Perhaps that is a wrong way of looking at it. Anyways, putting this back on right there. There we go. Okay, now what are the other things that I want to talk about? I just want to check my notes here. Okay, we got that. Here's also what I want to highlight as well. If we go back to the bi-weekly, actually, this one's, or was it this one? No, that's the bi-monthly. Jesus Christ, no wonder it doesn't look like that. Okay, there we go. That's what I'm looking for. If we go back to the bi-weekly here, what I can also show you is we need to take off this one right here. Nope, that's not it. Nope, we want to take off this one right here. There we go. Yes, that's not it either. Goddamn, man. It's, where the fuck is, there it is. Okay, Jesus Christ, man. Need to label these things better. My bad. No preparations before these. These are all in the moment, my friends. Anyways, the next sort of concerning thing that, you know, could happen with this price action, and looks like it's kind of on a crash course for happening, would be the potential cross between the 9 exponential moving average, this one right here, and the 20 simple right here, represented by the white. And where have we seen this in the past? Well, on basically those same iterations. Right here, bull trap down. Right here, bull trap down. Right here, bull trap down. And do we have any other ones? This one right here. No, well, yeah, not really bull trap. In fact, this would be probably just too young to really care about moving averages like that when it's, you know, still within its first like year or two of history. It's like not going to be that relevant, to be fair. So we do want to accurately represent everything as much as possible. Anyways, moving on, do we want to talk about this one right here? Yes, I do think that we should do that. We can talk about, actually, yeah, let's talk about this right here. Okay, cool. So what I'm going to do is I'm going to get rid of everything except for, we don't need this, we don't need this, we need that, we need that. Do we need the 21? No, we do not. Okay, here we go. So we just have 4 moving averages on here. Actually, do I? No, yeah, we do need these. Okay, so what I want to put the focus on is first the blue 377 exponential average. This is kind of like your yearly / Fibonacci major moving average right here. This is the 55, the green, and the purple 200. I look at this as an exponential moving average death cross, which is typically rather powerful, although in the red environment that is. And then the white represents a 200 simple. Kind of memorize what's going on right here. We have a consolidation between the 200 exponential average and the 377. We did get essentially the death cross right here, and the 200 simple is governing from above. Very interesting, right? Anyways, we did see something very similar right on over here. In fact, almost pretty much to the T. We get a consolidation between the purple 200 and the blue 377 exponential average. Kind of works its way through there for the next couple months. And what happens after that? We get the official death cross, and the 200 simple does start governing a bit as well with that negative slope. Yes, there is a move above. It is rejected. That is your bull trap and massive move to the downside. Do we have another example on top of that? I believe we do right here. Bitcoin consolidating between the blue 377 and the 200 exponential average right here. They get the death cross right there. Again, terrible timer of a move. It actually pumps into it, which is kind of what I'm thinking right here. Again, whether you're bullish or bearish, I do think that Bitcoin is going up from here, as I've been saying for a while. But where do we get rejected? Right at the 200 simple, governs, and down we go. Do we have another example on top of that? Yep, we got one more right here, actually. You already know where it is. Again, consolidation between the 200 exponential average and the 377. We get the death cross right there, bounces up into the 200 simple, rejection, and down. Do we have another example? Probably not. No, yeah, that's it. So again, it's like whether you're bullish or bearish, I do think that Bitcoin very, 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 very likely mounts an assault to the $40,000 territory, maybe even this week. And then perhaps even continues up to the mid-deep $40,000 territory over the next, over the next month and a half or so. But as we do look at the mid to deep $40,000 territory, there are several points of confluence that do say that this is an area, hot with contention. If we throw in our drawing tools right here, do I have it on? I don't have it on, but I marked off this massive blue box territory. In fact, let's just go to CME and make this easier. There we go. Well, I guess I didn't do a great job of it, but whatever. All right, so you can see we got, I did take a fib retracement for bearish retracement this is, and that would be coming in. Let's actually take the wicks on this side right here. There we go. That's going to make a little bit more sense. There we go. And we can see that the 0.5 and the 618 Fibonacci retracements are coming in between about $46,000 and $50,000 right here, respectively. The reason why that is relevant is because this is typically your sort of trappy areas on a long-term trending move. So this would be your traditional like bull trap area. In fact, what I'll do right now is I'll thrust a nice rectangle in betwixt these. And guess what? If we zero in on this, well, this is one of Bitcoin's mega gaps right here at about $49,000 between about 46 and $49,000. So an area hot with contention. Actually, I'm going to lower this down so it's more in line right there. Beautiful. Anyways, while I do think that Bitcoin probably does get, very I don't want to say like very likely gets it, but is very possible to get a move into this region right here. First and foremost, whether I'm bullish or bearish, just like right now, whether I'm bullish or bearish, I am essentially looking for an upside move. I'd be looking for this area to get rejected. The next question is what is essentially going to set in, whether I look at this as a macro low or not, based upon our new information. And that would be, of course, do we get the hash ribbons buy signal? If we do, legitimate possibility that we actually do have a macro low. Still though, with a rejection right here, could Bitcoin come back down around 35,000 bucks or 33,000 bucks and hold the range? Yes, I do still think that this is going to take some time. Again, if you're looking at it from this perspective right here, this one should actually be longer, but it'd probably be looking somewhere at like the end of, at the very least, the end of August, but probably like September, October area, if I had to guess. The longer the better, the longer the better, the longer the better. And that's what she said, right? Stupid fucking joke, but you get my point. The longer the better in this case right here. That it stays above about 33,000 bucks without actually breaking to the downside. Of course, if that area does break, we get to talk about all the fun targets, deep into the $20,000 territory. Probably going to be bouncing along the way at, 25 or 24,000 bucks, but ultimately 20,000 bucks would be a very high probability target with, potential continuation, to like 15,000 bucks. But right now, we get to entertain the possibilities of a bit of an upside sustained move. So I think that that's going to be more of a focus for a video like this, but make no mistake about it. All of the downside targets that we spoke about in prior videos, still very much possible, but the criteria for them getting set off is, it's not really near where we're at right now. So it's not as relevant in my opinion. Anyways, okay, what else do we want to talk about? Yes. Okay, should we get over to this chart over here? We got the moon phases working for Bitcoin. All you had to do is buy the bull moon. Kind of funny, but also kind of silly. Anyways, what else did I want to mark off here too? Yeah, we also do have something that's relatively important that happened actually this past week. Remember this very long running trend line going in from Bitcoin's last mega high, the last major high on the TSI right here that happened in Jan, which matches up with all of our subsequent highs after that. So we're talking about our January highs, we're talking about our February highs, we're talking about our April highs, our May highs, and then more recently our June highs. Again, that's this, and then more recently this has actually been broken on that trend line. So we do have something new going on is what that does tell us. It's a derivative of price action, obviously. So it's going to be a bit of like a forward kind of look on that and leading price action in this case. And, looking at it right here, yeah, that did play through. In fact, we even got another drive of phantom div on Bitcoin's last low on the daily. So pretty damn good there as well. So again, short term, I do like this, and I think it's very, very likely to make a move towards 39 or 40,000 bucks. Kind of similar to what I've been saying over the past week or so, and this starting to look like this one probably is it. And then we could extend those targets to the mid deep $40,000 territory. But again, I probably would be looking for a pushback on that level, at least at first pass. The only way that I would not entertain the possibility of a bull trap within that region, that being the $40,000 territory, deep $40,000 territory, is if Bitcoin starts closing daily doldrums above about 50,000 bucks, especially if a weekly gets closed above there. Okay, we're bullish and fair enough. Bitcoin can start talking about like 6-digit targets in the next like half year to a year, whatever the fuck it ends up being. I still think that's a little bit further away. I think that this market is still set to bore you at best, and at worst, it's gonna drop out the fucking lows and absolutely wreck everyone to shreds. I strongly do not believe that Bitcoin's gonna like V bottom, in like a week or two and just go straight back above like 60-70,000 bucks. And again, maybe I end up eating my words on that. It's a classic thing, but hey, fair enough. Anyways, okay, so we spoke about that. Okay, so let's talk about a few more bullish things that are still potentially on the schedule here. By the way, we got the 2.158 Fibonacci time extension right here coming in middle of July. That's rather interesting now, isn't it? Because that is around your Ethereum your Ethereum update, whatever the hell. There's a lot of kind of hype around that, and maybe it's deserved, maybe it's not. More importantly, the market will move on it, and perhaps Ethereum leads this move to the upside. In fact, it looks like it is right now. It is actually having a pretty damn good day. Looks like it's back almost around 2,300 bucks. And well, I would imagine this is typically going to be a rally into the event, and typically what happens when these big massive events happen, buy the rumor, sell the news. Buy the run up, sell the event for the most part. But hey, maybe this time is different, right? Anyways, that actually is lining up around that data, I believe. So we got another couple weeks, it looks like, around there. And actually, yeah, 2 weeks to the day. and probably free range during that time, if I had to guess, to the upside in this case. Anyways, let's go over here, and I want to check out my other chart. I think it's this one right here. Here we go. This is going to be okay. Yes, this is it. Okay, beautiful. All right, so if you are also bullish as well, you're probably looking at something like this, right? Where this is the Bitcoin stock to flow rainbow indicator. It's just makes it nice and color coded. Anyways, you can see as of a couple weeks ago, we did enter into the solid green territory, I would say. And with that in mind, we do see, okay, yes, we are on a weekly, okay, good. We do see that anytime that we have led into the solid green territory, Bitcoin is actually, well, has actually been in a corrective phase to begin it, and then put in, some nice rallies. So let's look at the last time that this happened. Bitcoin turns green right here. Yes, we get a correction, similar as we've had over here as well. And then from corrective low to next major high, 400%. Bad, not bad at all, and actually in a very short amount of time as well. Anyway, same thing over here too, right? Bitcoin enters into the green right here. It's actually just finishing its prior correction, it looks like. And from that corrective low to next major high, 700%, not bad. And then before that, we don't really have enough history, it looks like. Maybe we could go over here. Okay, yeah, you got one more. If I go to like the longest running chart right here, shout out to Mr. Crypto AD for showing me this one. Actually wasn't aware of this chart before, but it's actually really nice to have instead of using shitty ass BLX index, which doesn't update as much. Anyways, looking at this right here, looks like we did turn green over here. Like this was right at the beginning of Bitcoin, so kind of not as useful in my opinion, but still, we can look at it, and from that low to next, I mean, that's just not even fair. So we probably not relevant is what I'm trying to say. Anyways, I think that's rather interesting. If you do want to be bullish, you're probably looking at something like that, if I had to guess. Also, you could be looking at something like this too, the Bitcoin log curve zones, which I do think, yes, we are still holding right here. So if you are looking at this from the historical, from all the way back into history, what do we see? We do see a nice interplay around this yellow zone right here, which we're actually currently at the bottom portion of, which as long as, and yes, we did kind of break below it before, but that's okay. Especially if it's not like, a bunch of consecutive closes below. Anyways, in this case right here, as long as we hold that region, it actually is, at least historically speaking, on your first stab into it after a move to the downside, actually typically does hold before leading into new, mega highs. We see this one over here where Bitcoin kind of held into it a bit, comes down to the green, bases on there, and then rallies up to the red. Same thing over here, rallies up from the green, spends some time consolidating within the yellow, and rallies up all the red before topping out for a while. Same thing over here, rallies off the green, spend some time into the yellow, and then rallies up to the red before putting in the mega high. And then have we done that just yet? No. And have we ever put in a cycle high without reaching the red? It depends how you kind of define that. I think a lot of people would argue that the 2013 was like a double bubble, but I would actually look at this as one pure cycle in my opinion. That's just my opinion. I don't have a good way of explaining that, to be honest with you. I can make a good case for both, for both sides, but I do think that it was generally one mega move. The reason why I say that is because we never really saw like a macro reversal in this region right here. As far as the weekly goes, did we even get a downtrend during this time? We got a high, and then there's your low. I mean, so no, I would say no. It's just like one massive consolidation, whereas the other ones actually are reversals. We do have lower lows and lower highs along the way. Anyways, as it is right now, well, obviously we have not made it up all the way to the red, and we have been basing within the yellow. So that is technically speaking, or what you might be looking at as a long-term, still like a long-term opportunity if you are in the more investor type. Anyways, we'll go over here as well. I want to check out the bi-monthly. Is there anything to update right here? Still basing off the 9 exponential average. That is okay. It's not a death sentence in and of itself right now. In fact, it's not even a bad thing. I mean, we're still above it, so okay. But you can see that, well, no, there's actually nothing else to add on that. It's just fine. It's not like a counterpoint to anything. We even see the accumulation distribution indicator remaining with the positive slope right here, but this is not as tested as the monthly. The monthly has some good history. This one just does not have the same history in my opinion. Anyways, we can also go to the quarterly, which closed last month as well. What do we have right here? We did close below the topside Krown band. Again, not a death sentence in and of itself. It would have been a lot worse if we had like a bearish engulfing off of that, but we didn't. But this is also, very similar to what we saw back on over here when the run really started to end. And is there anything else that I want to say about this? No, I don't think there's anything too too interesting to say about this, to be honest with you. And then we can go to the 6 month as well. How do we work out on this one? I mean, technically speaking, if you are bullish and you're looking at this from a troll underband perspective, this is mostly useless because there's just, you can see that barely any data has actually populated here because it's still, you know, like a 10-year asset, 11-year asset right now, or actually I guess more like 12 years. Technically speaking, we are basing off the top side trailing band. Thus far, we did get a backfill in last bi-yearly open, so okay. Although it is one massive shooting star dildo right here. But keep in mind that this was like your first move up from your actual consolidation. If you're looking at this from a bi-yearly, well, where have we ever seen a top come that fast from a long-term consolidation? Actually, never. But we also barely have any data here, so it's you know, it's really splitting hairs. I don't think that you know, you can obviously construct a case for both sides. I think that is mostly useless, but it is worth talking about just because it is technically playing off that right now. So I suppose you can go with that assumption until proven otherwise. And this could be one of those scenarios where, you know, what's the most likely thing to happen? Well, typically speaking, it's what the least likely thing that's being spoken about. I think that I've been very, very consistent on this channel here, as have you know, a lot of members on this channel in this community, that, you know, whether you're bullish or if you want to be bullish, this is going to take a very long time. We're not just going to be bottom out to fucking $100,000. We're also not going to, you know, just drop the bottom out to $20,000 like this exact moment. It's probably going to take some time, and I do think that, you know, this is playing out relatively well thus far. So what do I typically see amongst other communities and YouTube channels? I typically see like doom targets and moon targets. It's no secret why people talk about that. One, it's a little bit of hopium, a little bit of doomium, but it gets a lot of views, it gets a lot of attention. And if your business is to be a, you know, YouTube like essentially marketer, which look, I'm not talking shit about these people at all, like a lot of them are my friends, but you have to understand it is a bit of a different thing. If you're a marketer, you need the views, that's where you get your income, and that's completely fine. You know, they are providing the service, and actually have a lot of respect for many of them. But on this channel, we are traders, and I do make my living from trading. I do not make my living from, well, I mean, it's actually quite nice from YouTube now. It's like seeing if things that have upticked. I want to be open and honest about that. Like before, like even just a year ago, I was like, holy fuck, like how does a YouTuber ever live off this income? Now it's like, okay, yeah, you could probably do this. But you know, I'm not relying on that. So I am at liberty to get my full and unadulterated opinion on this. And realistically, sideways is the name of the game right now. You know, especially if you want to be bullish. If you want to be bearish, I don't think that you really have a good play right here, to be honest with you. I think whether you're bullish or bearish, this thing's going up right now. If you're bearish, you probably want your fills from higher, if anything. So it, you know, still a lot is you know, there is a lot left to be decided, but I do think that there are some good indicators now for the bulls here to, you know, kind of provide like a path forward. Again, probably over the next couple months, holds this area, doesn't break below, let's call it like 32.5, and then we see those three signals print in conjunction with each other, of which we have basically 2 of 3 going on right now. And if the third one were to print, you know, again, I'd probably still be looking for a bull trap in the mid to deep $40,000 territory, but I'd be looking to buy the low side of that if it comes back down, you know, anywhere below $40,000. That'd be my sort of signal to myself. Hey, this is the time to be looking for perhaps a long-term trade. You don't get these opportunities too often. Anyways, let me make sure that I have gone over all of this. I don't think it's wise for me to rehash all of the things that I spoke about in the prior long-term analysis playlist. That kind of led into this video. I just wanted to update on what has changed here. But what has essentially changed is that actually we have gotten some confirmation of the more bearish things, to be fair. But the more interesting thing right now is that it does give the bias that we will get a bull trap in the mid to deep $40,000 territory. It's just, well, all of those iterations actually in the past, we have gone lower over time. So it is still, you know, it is still a great concern. But for right now, you know, enjoy the short-term, medium-term upside, and that can obviously evolve later on. I would not feel comfortable saying right now that it is fully bullish or fully bearish. I am comfortable saying that there are significantly more bearish things on the table than not, than bullish, especially as confirmed with the last monthly closure. But again, that doesn't mean that Bitcoin can't rally up here. We are dealing with an asset that moves fucking big time, man. So, you know, at the end of the day, it's going to be a game of patience, no matter which side you're on. I also do want to provide a little bit more supporting evidence for some short-term, medium-term continuation of the upside. That would be this baby right here. Let's go over to our 5-day chart. We did see our 5-day Stokes actually officially cross the upside on the last, or did we actually? No, we did not. But we're going to see it today, actually. Or, well, actually, maybe we don't. It's 35,900. Let's see what this chart says right here. This one has 35,400. About this chart right here, 34,500. Weird. BitMEX is kind of the odd man out in this case. But yeah, yes, we did essentially see it cross the upside. On Bitstamp, which I put the most weight on, Bitstamp and Coinbase for the most part, and both of those are pretty much in the same area, about $35,000. And as long as Bitcoin essentially closes here or higher by end of day, this is also going to close the weekly as well. We will see that turn up with conviction, and this will also be based off of the bottom side of this super guppy. Has a bit of special settings in it, but you can see all these wicks accumulated below this region. It's a lot more likely we're going to fucking bounce here than not, and probably at the very least head up to the top side of this. And then if we do check out the last sort of rejective high, yeah, that's probably your move towards $46,000 at the very least, maybe more. Anyways, weekly is about to fall through as well. By the way, it's actually coming in from a much lower angle too, 34,100-ish region, meaning that if Bitcoin can just close above there today at 8 p.m. Eastern time, we'll see both the weekly and the 5-day cross the upside. So momentum will be shifting the upside after putting in, a rather complex low right here, but a low nonetheless. And, we can start to entertain those more deeper targets, so to speak. 3-day, did we see anything new here? Looks fine. 3-day momentum oscillators popping back up. Bi-daily, same thing, 32,250 or 32,300 about, and then daily, same thing as well, 33,120. So all higher term time frames are on the same side right now. That is generally good, and I'd be looking for a decently upside within at least the first portion of July. By the way, the 3-day should be denoted that. Well, should I talk about this now? Because it's not true. Well, what I was going to say is that the 3-day Stokes crossing up from the critical zone have pretty much always been it's always been a major low, but not a macro low. This one actually did lead up into this prior bull trap right here. By the way, actually, this would be a good one as well. See, this one crossed up right here from about the same area. We get a massive move to the upside. This one even tops out, by the way, at the 618, I believe. Let's see. Yep, right at the 618, beautiful. And what happens after that? Bull trapping down. And remember, that kind of played with a lot of the bearish iterations for that signal that we did look at. But it'll still be a nice move from here too. Anyways, yes. That's also what I want to look at. How are we looking at on the monthly here? Monthly Stokes down as long as below 51.5. What about quarterly? Quarterlies, really not too much information here to make much out of. This is not helpful. This is just not fucking helpful. Bi-monthly is closing down. Is crossing down. We've only seen it happen a couple of times in Bitcoin's history. That would be January 2014 for second cycle high, and November 2017, third cycle high. So fair enough. Again, I don't know how much weight I put on these, because it's just not a whole hell of a lot of history. But at least for right now, things are looking more or less fine. I'd be looking for short-term continuation confirmation with any sort of a move back above last week's high. That would be 36,623 and 79 cents, or realistically, any sort of a 4-hour delta closure above about, I'd even say 35.5 to be honest with you. But if you want to be super safe. Not that there's anything such as safe, but I'd say about 36,150-ish region right here. And then yes, very, 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 very likely a move at the very least to the deep side of this territory. That being between about 39,000, maybe even 40,000 bucks. Probably a pullback there with likely continuation of the $40,000 territory. But as I've been saying, and as I've been repeating maybe too many times, probably time for caution. It's like right now, whether I'm bullish or bearish, I'm looking for a rally off this level. And then up here, it's like whether I'm bullish or bearish, I'm looking for a pullback at least off the first pass on any sort of a move into the deep 40s. So yeah, I think that's where I'll leave you off for right now. I think we covered just about everything that I wanted to speak about. I'll bring you back on over here to the Krown chain application once again. We do have, of course, our sale going on. And again, I just want to make sure that like people who are actually interested in this content, you make sure that you watch the videos so that it's you know what you're getting into. And for most people, I would strongly suggest, if you're new to trading, if you're new to anything like that, don't get into any of these programs first and foremost. Take advantage of the free content on this channel, and I sincerely mean that. That's why I fucking made it, because most people, they, you just want to like dabble a little bit, learn a few cool things, and then maybe that helps you with like your decisions over time. Or maybe you just decide, like, I don't want to fucking do this. Like that sucks. That's fair enough. Not everyone wants to do this, and that's completely reasonable. But yes, these programs, especially the TA program and the options program right here, are very long, 35 to 40 hours. I think the TA program's like even above 40 hours now. It's like quite significant. We do offer payment plans, obviously. I kind of wanted to make it as like Oh, nice. We actually put it in as advanced. Cool. I wanted to put it in as like a, or kind of like make it in the same way as I would a college course, because that's what I wish I fucking did in college, because I just wasted my time in college. You know, I'm not saying that everyone wastes their time in college, but I certainly did, and I wish I just like took something like this, and you know, you could probably expect to complete it in about the same time. These are not fucking magic pills. They are not going to immediately make you a profitable trader. For the most part, I've seen people who actually even get profitable to begin with, which is not everyone. I mean, most people, you know, I honestly think that most people just buy it as like a way to say thank you and don't really have an intention to look at it. But the people who do really put the effort in, I usually see about a year to a year and a half, sometimes a little bit shorter than that, yes, especially if you come with like prior training, or if you have like, you know, some people are just made for this. Some people know poker, which translates incredibly well. Those people typically pick it up very, very well. We also have the Jewel indicator, which is no longer a subscription. It is just a one-time payment. So if you want that, that's available for you right there as well. And of course, with any of these indicators, even though I love them all, like the Jewel, the RSI, and the STC, I love all three of these like immensely. They're not fucking magic pills. If you don't know your risk management, if you're not already profitable, you can't expect them to like just, you know, magically do it like that. It just gives you a little bit of a better edge. And Character's RSI has actually taught me a lot of things which I had no fucking clue about, even after using the RSI for like a decade, basically. It's just insane. We also got Liquidity Zone over there. They do a bi-weekly newsletter focused on traditional markets. It's very, 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 very good content, very in-depth. And we got Mr. Jackie over here, who has a video program for kind of like a more psychologically based type of individual who, you know, they probably, you know, they already know trading, they already know technical analysis, they probably have a lot of experience as well, but for whatever reason, they're just not consistently profitable. They have maybe issues, or you might be having issues like following your plan, whatever that might be. That's going to be the program for you. And then he also has his live mentorship, which is like a more, you know, high premium sort of group, which he'll actually like go over your trades and whatnot, which is pretty damn cool. Anyways, with that said, it's been an absolute pleasure to speak with you on this nice 4th of July Sunday. Hopefully everyone's having a nice and an enjoyable, relaxing day, because I suspect that we are in for actually a more fireworky-ish July, perhaps. So with that said, take care. I salute you, and until next time.